Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now. Yes, you read that right. Donald Trump's social network, Truth Social, may be in a little bit of trouble this week. Could lose $1 billion worth of funding, and its SPAC deal may fall apart altogether. I think it's worth getting into exactly what happened this week and what could happen in the future. Why this is frankly a stock I would stay a long ways away from. Before we get to the details of this SPAC deal, I want to remind you to subscribe to this channel. It really helps people find not only this episode, but also future episodes of the Rive Project. Let's get into what's going on with Digital World Acquisition Corp. This is the SPAC that was going to combine with Truth Social, Donald Trump's social media company. I think it's worth taking a step back first and talking about how SPACs work. So normally, a SPAC will raise a certain amount of money, in this case, $300 million, with the goal of going out and finding a company to acquire. When they do find an acquisition target, they usually announce a PIPE along with that, which is private investment in public equity. That's basically another round of funding from big institutional investors, usually big names that you would know even as a small investor like Blackstone or BlackRock. And they're just simply investors that are putting more money into this deal and sort of giving their stamp of approval, if you will. So what happened with Digital World Acquisition Corp is they raised a $300 million SPAC. Then they made the announcement to combine with Truth Social, or the parent company of Truth Social, and the stock went crazy. And this gave the company the opportunity to raise a PIPE, not at the normal $10 per share, but a higher valuation. In this case, they were going to raise $1 billion at $33.60 per share. So this sounds great if you're an investor in this company. You get $1.3 billion total of capital to deploy to build both the Truth Social infrastructure and any marketing that may go along with that. Remember, this is a company that didn't really exist before this deal was announced, so they did have to spend a lot of money to spin up the business. Seemed like a win-win for investors and the company, as long as all of this holds together. And that's when we get to the SPAC collapse of the last 6 months or year, and specifically the collapse of DWAC. I'm sharing here a clip from the SEC filing that Digital World Acquisition Corp filed this week. And the highlighted part here is really what's worth noting. This is the $1 billion PIPE that I mentioned here, and this conversion to 29.7 million shares of stock. That's where you get the $33.60 per share. So eventually they would be able to convert that money into that stock. But as part of this arrangement, those investors putting that $1 billion to work could actually back out if the stock fell below a certain point. We know that as of at least September 23rd, there was $138.5 million of that PIPE that has decided to terminate that agreement. Now, it is possible that the rest of that will be terminated as well. There are reports that they're trying to negotiate a new strike price for the money that they're putting into the SPAC. But the reports are that they're trying to get a sweetheart deal of about $2 per share. The stock is currently trading in the mid-teens. It looks like they're trying to squeeze anything they can out of this deal because they know if that $1 billion of PIPE funding is not there, the Truth Social acquisition itself may not go through. Now, this continues to be problematic for DWAC investors because that initial $300 million was put in at $10 per share. What SPACs usually do is allow investors to pull their money out if the stock falls below $10 per share. So if we see the stock continue to fall, basically if investors think that the acquisition isn't going to happen as is planned, which is possible by the end of this year, that stock could continue to fall, or investors could simply decide to pull their money out and get their $10 per share back. At best, right now, it looks like Truth Social would be getting about $300 million in funding, well short of the $1.3 billion that they thought they were going to get when this deal was initially agreed to. And given the slow start to the social network, that may not be all that appealing for anyone involved. Now, if this all sounds a little bit wacky and seems like a house of cards, it's because it kind of is. When the deal was announced, the DWAC stock was trading at about $10 per share. Shares peaked over $90 per share, so there was a ton of speculation that there was going to be a lot of value added by merging with Truth Social. But when the stock fell, the value simply falls apart for shareholders. Now that the stock has dropped, the argument investors are trying to make is that $1.3 billion that they initially wanted to raise is going to require taking a much larger percentage of the company. That leaves less upside for existing shareholders in DWAC. This is really the risk in investing in SPACs before any deal closes. And we've seen with the fall of the SPAC market over the last year that this continues to happen over and over again. And if the stock falls below $10 per share, I think it would be really hard to see any acquisition happening. That puts Truth Social in a really tough position, and I think frankly makes the DWAC stock just simply uninvestable at this point until we know exactly what the future is. Even if you want to own this company, I would wait until any deal closes and see exactly what the financials and the dilution looks like. Thank you for watching this video. If you would like to see more, please subscribe below. It helps people find the show, and I will see you next time.